At exactly 8:30 every morning, billionaires across the world begin making decisions that quietly move entire economies. Not while driving Lamborghinis, not while throwing money around recklessly, but behind closed doors, inside silent offices, surrounded by spreadsheets, private advisors, and opportunities most people will never even hear about. Because the truly wealthy invest differently. And the difference between how ordinary people invest and how the rich invest is far bigger than most imagine. An average person might save money in a bank account earning almost nothing. Maybe buy a few popular stocks. Perhaps gamble on trending cryptocurrencies after hearing about them online. But the rich? They think about money like a weapon, a machine, a system designed to multiply itself endlessly. And once you understand how they actually invest their wealth, you begin to realize something unsettling. The financial game was never designed equally. For centuries, wealthy families understood a secret ordinary people rarely noticed. Money sitting still dies. Inflation quietly eats it alive year after year. $1 million hidden under a mattress slowly loses value while the world moves forward. The rich learned long ago that wealth must constantly flow, expand, and reproduce. So instead of working for money, they make money work for them. That idea sounds simple, but the way they do it is fascinating. Take real estate, for example. To ordinary people, a house is usually a place to live. To the wealthy, real estate is power. Entire city skylines are quietly owned by investment groups and billionaire families. Luxury apartments, shopping centers, hotels, warehouses, farmland, office towers. And here's the twist most people never realize. Many rich people buy properties using debt, not cash. That sounds backwards. Why would someone wealthy borrow money? Because the rich understand leverage. If inflation rises while property values increase, the debt becomes cheaper over time while the asset becomes more valuable. In other words, banks unknowingly help wealthy investors become even wealthier. It's one of the oldest tricks in finance, and it works astonishingly well. But real estate is only the beginning. The truly wealthy often invest in businesses before the public even knows they exist. Imagine hearing about companies like Amazon, Google, or Uber years before they became global giants. That's exactly what venture capital firms and elite investors do. They place millions into risky startups, hoping one becomes the next billion-dollar empire. Most fail. But when one succeeds, the rewards are almost unimaginable. Peter Thiel invested around $500,000 into Facebook during its early days. That investment later became worth over $1 billion. One decision, one company, one massive return. This is how many fortunes are truly created, not by salaries, but by ownership. The rich don't just buy products, they buy pieces of the systems producing those products. And that changes everything. Then there's the stock market, the place most ordinary investors believe is the center of wealth building. Ironically, many wealthy people approach stocks completely differently than beginners. Average investors often chase hype, panic during crashes, buy emotionally, sell emotionally. The wealthy usually do the opposite. When markets crash and fear spreads everywhere, rich investors often become aggressive buyers. Why? Because they understand something emotionally difficult. Panic creates discounts. During the 2008 financial crisis, while millions panicked and sold investments, some billionaires quietly bought massive amounts of stock at bargain prices. Years later, many of those investments multiplied dramatically. Fear became opportunity, and this pattern repeats constantly throughout history. Warren Buffett once famously said, "Be fearful when others are greedy, and greedy when others are fearful." Simple words, but incredibly difficult to follow when the world feels like it's collapsing. Yet perhaps the most interesting thing wealthy people invest in isn't stocks or real estate. It's access, private deals, exclusive opportunities, relationships. Many elite investments are unavailable to ordinary people entirely. Private equity firms, hedge funds, early-stage startups, rare art collections, infrastructure projects, and private credit markets often require millions just to participate. This creates a strange reality. The richer you become, the more opportunities suddenly appear. It's almost like unlocking hidden levels in a financial video game, and the returns at those levels can be enormous. Some wealthy families even invest across generations instead of years. While ordinary people think about monthly bills, dynasties think about preserving wealth for 100 years. That changes how decisions are made. Instead of chasing quick money, they prioritize ownership of long-term assets. Land, energy, infrastructure, businesses, and investments that survive economic cycles. This is why many wealthy families remain rich for generations while lottery winners often lose everything within years. One group owns systems, the other suddenly receives cash without understanding systems. And systems matter more. But perhaps the biggest secret of all is this. The rich are obsessed with protecting wealth, not just growing it. Once fortunes become massive enough, preservation becomes more important than risk. This is where trusts, tax strategies, offshore structures, insurance policies, and diversification enter the picture. Some billionaires hold enormous amounts of cash waiting for economic crashes. Others spread investments across dozens of industries and countries to reduce risk. Because wealthy investors know something most people ignore. Making money is hard. Keeping it is even harder. History is filled with rich empires collapsing from arrogance, overconfidence, or reckless investing. Even billionaires fail spectacularly sometimes. During the 1929 stock market crash, fortunes vanished overnight. During the dot-com bubble, investors lost billions chasing internet hype. Crypto created overnight millionaires and overnight bankruptcies. Money rewards intelligence, but it also punishes greed. And greed has destroyed countless fortunes throughout history. Ironically, many wealthy people live far below what ordinary people imagine. Some billionaires wear simple clothes, drive normal cars, and avoid flashy lifestyles completely. Because they understand a powerful truth. Looking rich and being rich are very different things. A luxury car loses value. A private business can generate value forever. One drains money. The other creates it. That mindset changes everything. And maybe that's the biggest difference between ordinary financial thinking and wealthy financial thinking. Most people focus on income. The rich focus on assets. Most people trade time for money. The rich build systems that generate money while they sleep. Most people buy liabilities that appear impressive. The rich quietly acquire ownership. And over decades, those tiny differences compound into staggering wealth gaps. But there's one final twist. Not every wealthy investor started rich. Many self-made millionaires began with ordinary jobs, ordinary lives, and ordinary salaries. What separated them wasn't magic. It was understanding. Understanding how money moves, how assets grow, how compounding works, how fear controls markets. And perhaps most importantly, understanding delayed gratification in a world addicted to instant rewards. Because wealth in many ways behaves like a tree. At first, growth is painfully slow, almost invisible. Then eventually, after years of patience, the roots become strong enough to support something enormous. And suddenly, what once looked impossible becomes inevitable. Which raises a fascinating question. If the rich invest differently, and those strategies have existed for generations, why are so few people ever taught how the game actually works?